February moving through the late morning session on Wall Street, and the market's tone is cautious but curious. Rates, AI, and commodities are all jockeying for attention. I'm Grant Mercer. This is Storm Stock Solutions, and we're here to keep clarity through the chaos as this next hour unfolds. Since our last update, the macro backdrop is still anchored by the same big headline: Fed Governor Christopher Waller. According to reporting from MarketWatch, Waller, seen as a finalist to replace Chair Powell, says he expects inflation to start falling again over the next 3 to 4 months and sees room for roughly 100 basis points of rate cuts at a moderate basis points pace. The key word there is moderate. Traders are treating this as confirmation that the cutting cycle is real, but also that the Fed isn't in a rush. That keeps a lid on the more aggressive pivot trades while still supporting growth and risk assets that like lower yields over time. Where we have seen some evolution in this hour is in the AI and big tech narrative. MarketWatch is highlighting that Alphabet's Waymo unit, the robotaxi business, has been on a tear and could be valued near $100 billion. At the same time, Amazon is in focus on reports of a potential $10 billion deal with OpenAI that could finally wake up a stock that's been relatively flat this year. Together, those stories keep the AI theme front and center, but they also raise that nagging question: are we looking at durable new profit pools, or are we feeding the fear of an AI bubble? For now, traders are parsing the details deal by deal, but mega-cap tech is clearly a place the tape is watching. On the upside, precious metals remain one of the cleanest strength stories. As MarketWatch notes, strategist Albert Edwards is asking whether gold's roughly 60% rally this year is just the appetizer for a late 1970s-style main course. With Waller signaling gradual rate cuts and the possibility of inflation easing but not collapsing, it's not surprising to see continued interest in gold and silver as hedges against policy error and long-term currency debasement. Miners and physical-linked plays sit firmly in the areas of strength column as we head toward midday. On the risk side, energy is still an area to handle with care. MarketWatch points out that 2025 is shaping up as a historic year for oil, with crude prices on track to finish near a 5-year low, because the world simply has more oil than it needs right now. That's a tough backdrop for parts of the energy complex, even as another strategist, also cited by MarketWatch, is out arguing that in an inflationary environment, energy stocks are the new bonds. That clash between near-term oversupply and longer-term own energy for income thinking is exactly where traders are getting whipsawed. Under the radar, there are a few sleepers to keep on the watch list. One is that Amazon OpenAI story itself. If that $10 billion deal progresses, it could reset expectations not just for Amazon's AI roadmap, but for how the big platforms are going to partner, spend, and compete in 2026 and beyond. For now, it's a developing narrative, but it has the potential to become a real sentiment driver for both Amazon and the broader AI complex. Another quiet but important thread is in healthcare. MarketWatch reports that each measles case now costs the U.S. system at least $16,200 as outbreaks increase. It's not moving the S&P on its own, but if those headlines intensify, investors may tilt their focus toward insurers, hospital chains, and vaccine manufacturers as they reassess the cost and opportunity dynamics in that corner of the market. And in the background, personal finance stories about 401(k) and annuities and how much support parents give adult children continue to show how everyday households are thinking about risk and income in a lower rate world. That doesn't hit a specific ticker immediately, but it does shape the long-run flows into income products, equities, and alternatives. Into the next hour, I'll be watching 3 things: whether bond markets continue to digest Waller's measured cuts message without a big spike in volatility, how a linked mega caps like Alphabet, Amazon, and Netflix trade as these Waymo and OpenAI headlines circulate, and whether the divergence between strong precious metals and weak oil widens or starts to narrow. All of that will set the stage for our closing bell wrap later today. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.